So I know you're in a quiet period, but do you see some of these broader pandemic trends that we've talked about a lot, like longer stays and work from home? How do those play out in the current market? And if we go into a recession, a deeper recession next year?
We're just continuing to see travel changing and evolving. We're seeing the long-term stays, which have been an important part of our business. We're 20% of our nights in the second quarter. We're continuing to see those trends. We're seeing people travel to more places all around the world. We've had people travel to 9,600 new cities and towns with new guest arrivals that have never had guests before.
Right. So that sort of mix shift, and I've talked about this with Brian before, the longer stays to bigger homes and more rural areas, has actually led to your ADR, average daily rate, we can call it home sharing inflation, rise at perhaps a faster clip than some of the other OTAs out there or hotel chains. Do you anticipate that to continue? Will those prices continue to rise, or do you see them easing over the next few quarters?
What we remember that we have any kind of property, we have properties for people share their homes, where luxury properties, and over time you can see that the increases in ADRs may moderate as people can have different options for their types of stays.
Okay, so moderating. Have you seen any evidence of that this year?
In terms of inflation, remember that Airbnb is incredibly resilient in terms of any kind of economic pressures that we've had. We have any kind of property, again, whether they're small properties that people can share to luxury homes. We can do all kinds of sharing for these kind of properties.
Dave, what are higher interest rates, not just in the U.S., but globally, going to do to Airbnb's inventory supply of properties, and also to the cost for the owners of those properties to make a profit, and therefore the average daily rate, the cost to those who want to take out an Airbnb? Do you have projections on that? Because this is the first kind of big interest rate spike since Airbnb has been a really big global company.
A home is one of the biggest assets that an individual might have. And we've recently surveyed our U.S. hosts, and 40% of those hosts say that they use income from Airbnb to support rising prices. And so we continue to think that people will use Airbnb as a source of income to help offset impact of rising prices.
So let's talk a little bit, Dave, about profitability, because
Sure.
Airbnb has done what other in the sharing economy, even many newly public companies are still trying to achieve. You guys achieved real, actual GAAP profits, not adjusted EBITDA.
Yeah.
Net cash of nearly $8 billion as of last quarter. You've got $800 million in free cash flow. You even announced a $2 billion buyback program. What is the greater scheme here in terms of capital allocation? Is it time for you guys to get ambitious? Again, I know you guys scaled back plans and hotels throughout the pandemic. How do you think of it?
Well, a couple things. One is we're growing quickly. We grew our revenues 58% in the second quarter. And as you say, we generated $2.9 billion of free cash flow over the trailing 12 months. So we're both growing quickly and generating great free cash flow. And as you said, we had a net income of almost $400 million. And so with that kind of growth, we've had almost $10 billion of cash. We did announce a $2 billion share buyback program. But clearly, we're still in investment mode. We're still in growth mode. But because we can grow and grow so profitably, we don't necessarily need $10 billion of cash in order to support our growth ambitions. And so we're able to return some cash back to shareholders via the buyback.
How does that affect how you think about stock-based compensation? You're in a very unique position. You're the CFO of the company, but you're also the head of people experiences. So you understand why the stock is down 35% this year, 50% off its peak. But then you also speak to the employee side of things, and you have to tell them why their equity is losing value. Do you shift to more cash compensation?
Yeah, it's important to kind of realize that as a CFO, I'm about finding the return on investment, and one of our biggest assets are our people. And so actually being the head of employee experience, where we're investing in our people to get the most out of their talents, is incredibly important. Now, our stock is down largely in line with the broader market, and we'll continue to evaluate what our compensation is so we make sure that we're giving competitive compensation. But part of the competitive compensation is the flexibility that employees want. And so this is why we've announced this Live and Work Anywhere program, because what we're finding is that employees are demanding flexibility in addition to great compensation. And that's what they've been telling us. And when we announced the Live and Work Anywhere program, we had over 1 million people come to our website and see our career page and learn about opportunities on Airbnb.